If you're an investor like me, then you've been warned a million times about the coming recession, the big one's coming, be afraid. That's what the media loves to tell you. And unfortunately, today I'm with the media because I just went over TFI International's most recent quarterly earnings. And this is a company that was in the news in Canada specifically because they're trying to move down to the United States. And the Caisse de Depot in Quebec got really mad at them, and it was a whole story. But that's not what I care about at all today. Today, I'm looking at them because they're confirming a trend that I have seen with multiple companies over the last little while that has shown us a freight recession coming. And I'm going to talk about what that means, but Spark Notes, essentially, this is a leading indicator of a recession in the United States. Not just Canada, where we've spent a lot of time talking about economic problems, but in the United States. And if there is a recession coming in the US, that is going to drag down global markets. Everybody will be impacted, and it will impact your money and my money. So let's talk about what I see. Let's talk about what I think might be playing out, and then we are going to talk about what I'm going to do about it. If you enjoy this kind of content, please just subscribe to the channel. It makes a huge difference to me. Let's start. I've got some stuff up on the screen here. There's a lot of numbers, so I'm just going to sort of walk you through what's on the screen. The first thing in the gray bar that you see as one of the largest there is the total less than truckload revenue before fuel surcharge of the last several quarters for TFI International. And you see a steady decline. Decline, down to 737 from 770 a quarter ago, 794 2 quarters ago. Less than truckload revenue is typically small packages, things obviously that don't take up a full truck, and it's sometimes considered a less efficient trucking business. It costs more to ship things less than truckload, but it is something that TFI does quite well, and clearly it's been a large part of their business. Their truckload revenue has gone up compared to a year ago, but is still lower considerably than it was a quarter ago, 2 quarters ago. Logistics revenue is also down. And you see that, again, it's up from September of 23, but it's down from every other metric since then. And then, of course, you got to talk a little bit about operating income, because that's one of the areas that's been really tough. The less than truckload income, what I talked about earlier, down considerably, down to 70 million compared to 96 million a quarter ago, 109 million 2 quarters ago. And their EBIT is down to 157 from 200 a quarter ago and 207. A lot of numbers there. And you might be looking at me like, why do I care? Right? If I don't own this company, why do I care about those numbers? Well, you care about those numbers because they come with the warning from the CEO of TFI International that he sees a deep freight recession coming in the not so distant future. In fact, I've got here some serious numbers that went into the earnings report, because this drop that we see in revenues from different freight led to operating income falling by 19%, and it led to EPS falling by 30%, which is considerable. And they're not the only freight company that's recorded this. We've seen it from the Canadian railroads. We've seen it from Berkshire and their railroad. We've seen it basically everywhere, that these freight companies do not have positive things to say about the near-term future. Not too long ago, we made a video talking about Canadian National and their worries about the future and their focus on operating profitably, and how they said that they didn't expect high growth. And we talked about how, oh man, this is bad for Canada, but we're not talking just Canada anymore. We're talking about all of North America is seeing serious drops in freight. And why should you care about that? Well, again, this is a leading recession indicator. This usually predates the sort of retail or consumer level recession by at least a few months, if not quarters. And with that warning out there, we now have so many things lining up. Just yesterday, we talked about interest rates, and that's a really big warning in Canada, but it's not going to necessarily save the United States. Canada's interest rates are in one sort of spot where they're, maybe going up or down, and we don't know, and it depends a lot. But US interest rates are still elevated. US consumers are struggling, and inflation is stubborn in the United States. It refuses to go away. And with all of that worry, with all of that fear, with interest rates, we have fears of recession. Okay, let's talk about another topic that's been in every piece of news recently: tariffs. Well, tariffs are ideally supposed to bring manufacturing and employment back to sort of home countries. So here in Canada, we put tariffs on other countries to protect our industries. The United States is now shifting their policy to do the same. But obviously, that's going to have short-term negative repercussions for companies. I mean, as a Canadian, the US putting tariffs on our companies is huge. That sucks. We don't like that. And our companies are going to suffer, and people are going to be unemployed. I saw a recent episode of the Canadian Real Estate Investor Podcast, where they talked about employment levels in certain cities and the sort of dangers. And there are like real risks of serious recession in parts of Canada. But there's also going to be serious risk of recession in parts of the United States, because there are going to be American companies slapped with counter tariffs. There are going to be American importers who can't afford to pay those tariffs. There are going to be American consumers who can't afford to pay the surcharge because of those tariffs. And essentially, the short term will be painful. Now, again, everyone's been screaming this is recessionary. But on its own, there's always that question mark. So we have all of these different recession indicators lining up, and adding freight and having like a confirmed worry of a serious drop in freight does not make the situation better. It simply puts us in a position where we are more worried about a recession. And the stock market doesn't necessarily react to these kind of numbers like I have on from TFI here. The market doesn't really care about the freight recession indicators, or about necessarily about the interest rates all that much, or about the tariffs all that much. I mean, we see these short-term swings, but what the market will care about is when it hits the consumer. When the everyday person in the United States is hit by this, it will pull down the markets all over. When people don't go to Amazon, people don't go to Walmart, when people don't buy from Apple, when people won't buy a new Microsoft Windows device, that's usually when the market finally reacts. And it's usually an overreaction. And obviously, every recession is different because it's caused by a different thing. You can't really compare this to 2020. It's hard to compare this to 2008 because everything is different. But I think you maybe could compare what might happen this year to 2022. And just for a little reference, for those who don't remember, 2022 was a tough time for tech. It was a tough time for growth companies. It was a tough time for everything that wasn't defensive, because everybody was worried about a recession, inflation was flying, and they were worried about interest rates going up. And guess what? Interest rates did go up. But if you bought Meta in 2022, you made hundreds of percent. If you bought Palantir in 2022, you made hundreds of percent. There are a lot of these tech giants that crashed and then exploded upwards because the market overreacted. And that's the main reason why we need to look at recession indicators like this, because they warn us that there might be serious trouble for the average everyday Joe coming in the near future in not just Canada, but the United States. And if that does happen, and we do see a recession, and we do see a big stock market correction, it is an amazing buying time for us as investors. It is the ideal time to be buying stocks. I mean, again, think about the Meta investor in 2022. Think about basically any investor in 2020. Think about any investor in 2009. All of those people made huge amounts of money buying quality companies when the market overreacts. So what I'm doing, I'm watching the constant worry of recession. I'm watching the markets. I'm keeping my ear to the ground. I'm paying attention to trends. I'm thinking about interest rates. As a Canadian, obviously, more impactful to me maybe than to the average American investor, but I'm thinking about interest rates. I'm thinking about these various recession indicators. I'm listening to the talk in the media, and I'm preparing, because my mantra has been think long term. And in the long term, this potential recession is a massive opportunity. So that's what I recommend you do. Pay attention. Look at these kind of indicators. Doesn't matter if you really care about TFI International. I'm not saying we got to go out and invest in this company. If that's what you're into, sure. But it's not something that I am an expert in. What I am saying is that it gives us a good sign, a good signal to find what is happening beyond the noise of the everyday media, and to pick your moments really well for a potential buy the dip opportunity. That's what I'm going to be doing. And again, I recommend you do the same. With that being said, that's all I have for you folks today. If you enjoy this video, you enjoy this kind of content, please do subscribe to the channel. It doesn't cost anything. It makes a massive difference for us. And if you are interested in this kind of thing, you want to talk a little bit more about potential recession indicators or opportunities that might be coming up in the markets. Made a video just yesterday talking about the number one trend Canadian investors need to focus on, and I would ask you or recommend that you check that out if you're interested in this kind of stuff. With that being said, see you in the next one.